Good morning. Surprise, surprise. Little inflation going on here. What do you know? So the technical is telling us be careful for a while, but market has been resilient. And what we're looking at here, we usually don't look at the bond prices. We usually look at interest rates. And so here's the 10-year bond prices. And you see the move down. And it doesn't matter what you trade, you look to the left. And so interest rates going up, bond prices coming down. This is coming near support. Odds are the downside momentum is going to slow. That doesn't mean it won't go lower. Because typically, well, this is a daily chart. Typically, here's igniting bars and here's a continuation bar. It's still at support. But before we see any kind of suspect a turn, we'd have to see price action. So some kind of breakdown failure, some kind of turn, and so on. Maybe it just keeps going, and at some point, it's at least got to take out a prior bar's high. So on the smaller time frame, the 5-minute, you see how this accelerated to the downside after the report, and so even on this time frame, you see here it broke. Well, it's right there at that pivot, right? The same thing. This broke through. But what you typically see on whatever the time frame we're looking at is when you see this kind of a move, it stabilizes and then it goes down. And we look to see if the distance between the lows get closer together to see slowing momentum. So we suspect this will go lower. And seeing it's down as much as it is, probably doesn't go much lower. And so with that thought in mind, assuming it does, well, maybe 111 there, it's the momentum slows down there. The downside in the market should also slow down. I'm forgetting TAS symbol for 10-year right here. Probably TAS, Stephen. It's got to be ZN and then whatever else you could have the month and the year. This is just a continuous contract when you put $F on there, so you don't have to change it. All right, so let's look at where interest rates are, because they have to move opposite. And interestingly, this is not, let's see this, it's not at that prior high. So we've been talking about, well, for a while, we were talking about this coming down to support and looking for it to make a turn. It had the little shakeout, and now it's coming up to resistance. And this is where it's going to really get interesting, and whether something more ugly happens in the markets as to whether this continues to push up through that high. And I think that would really rattle the bulls, because now it's in a trading range. It breaks out above that. This starts moving higher, along with what we've been discussing of the dollar coming down here and beginning to stabilize. Eventually it did. And now, this is moving up. Interest rates are moving up. Inflation news is moving up. So all of that is going to worry the market, because that's what worried the market all last year. And we looked at the in MT Live yesterday, the inverse relationship between interest rates and the S&P 500. So if this continues, we suspect there'll be more pressure on equities, like there is right now. It still hasn't violated the trend. And it's, where is it? It's gapping below yesterday's green bar. Right. So yesterday, buyers stepped up again in this mess that's been going on. And it'll be interesting to see, do they want to step up here again with this sell-off? Bonds being at that prior low, if they begin to stabilize, maybe that gives it a little bit of a, pop initially. But gapping down under a green bar that closed at its high, that's got to rattle buyers. While it, this is kind of not kind of, it is. It's one of the most difficult things to sit through something like this, meaning, and why so many swing traders get shaken out. We've all been there with swing trades, looking at something like this. Now, if it's really bullish, this is gapping down, it should start to rally back and continue this trading range that's going on. That's easier said than done when you see something that closed at its high, suggesting it should continue to move higher. And now the news comes out and it's gapping below that low. And that's going back to where it is. It's right here near these pivots. And if buyers really want in, right, they're just like, today is just another inflation thing that we don't give a damn about for whatever reason, right? This is going to be their opportunity to buy near these pivot lows. Now, that being said, this major intraday pivot low here is slightly below. So even if it breaks, you've got a next level of support, not that far away. I mean, it is several points on the spiders, but overall, it's just in a trading range. And probably would have been better if it was gapping all the way down here for buyers to be wanting to step up. But look, if this doesn't retrace and we get a red bar here, it'll still be within a range. But yesterday's bar failing cannot be a good sign. That's for sure. And by the end of the day tomorrow, unless there's a miracle recovery, we could be looking at a red bar with a tail on the top. And we'll see if it, maybe it closes at 400 or so. So that 400 line, I suspect, even with this gap down, there's no way it's getting through 400 today. That's my perception based on the charts, that if it was to go down there, it would rally right back up because it would just be a tremendous move for a day. And that's kind of common sense and thinking, hey, what's the average range day to day for it to go from here in one day, all the way even down to this pivot low? That's not a pivot yet. It will be when this next bar starts, because it'll have 3 completed to the left and right. That will be a pivot low. It'll be marked that way tomorrow, maybe even at the open when this starts to show up. So it ain't coming down here today. That's what I believe, and that's what leads to the thoughts on SPX. That while it's moving down here and those premiums should be popping, and I'm sure they are. I've been doing some other stuff, so I haven't even looked yet, but I will right now. Anything down close to 400 should be a no-brainer. And I think anything above well, it's only gapping down here, but if we could get above this high, it should be fine. Jake is telling me 40.40. Let's go to SPX. 40.40. Yeah, that should be good. It's below here. Again, that'll be marked as a pivot as the new bar starts, because we'll have 3 to the right and 3 to the left. That'll be a pivot. That's this area right down here, which is probably hittable, right? Hittable, right? That a word, hittable? So you want to definitely be below that. And this bar right here, with all these bars to the right, there's nothing to the left. That's got to be something intraday. And it's kind of in between, but you can see right here, 40.20. So as we always do, we look at where's our lines of defense. And so one, kind of a smaller one right there. It's this bar, that tail bar, that's right here. And then 40.20. So if the markets would cooperate and poke a little bit lower to put some juice in 40.20, which there isn't any right now, the closer you could get to 40.20, the more it would absolutely be a no-brainer. But 40.35 has enough premium now, 70 by 80. So I assume markets must be going a little lower and up above 41.65. Yeah, 41.65 should be fine too, up above these highs. So again, gapping down here near buyers, but the downside, especially if it pokes lower in the first few minutes to get something down here, that'll be a no-brainer. And of course, we always want no-brainers with credit spreads. Futures stabilized on the pivots. I say it again. I'll say it every day. Look to the left. And 4,100 is going to be a big level right there. So, and you could look at the open interest there if you choose to. I suspect it's probably pretty beefy. I know 4,000 is, but it ain't going down there today. Right. So far, it's in a freaking trading range. But one of my comments, and I say it that way because frustrated that things aren't moving, but nothing I can do about it. One of my comments this week was, with this pattern, I said, ideally, it does this, the lower high, lower low into this support area. Now, historical patterns don't always work out, but when we know something is highly reliable, we put that on our wish list. And if this closes this way, I think that could turn out to be the case. And because this is major support, the low prior to the higher high, this pattern of a lower high, lower low typically ends up in that area where it then begins to stabilize again to start an attempt to rise. Now, most of the time, let me add this. So this is the kind of nuances that, you talk about in a course, but I'll share that here. Most of the time, this pattern, like here, this doesn't get up this high. And so what happens on the weekly chart is you have a nice lower high, lower low pullback bar by bar into that area versus having these topping tails up here. So while we may get this, it certainly won't be the ideal scenario where this pattern typically makes a new high. But we'll see how it plays out. Dan and I are always sharing these nuances to patterns and how to read them, since we don't use indicators. Thank goodness for you. Same scenario here, was moving up. It looked like it would continue. And, now it's not. We'll see where it closes. It's stabilizing here. Similar weekly chart. This has been showing relative strength, pivots to the left. So it's unlikely that this is going to collapse today. Dow has just been a horrendous mess. It's whipping back and forth. And it made a peekaboo up here, still within this range. Go to the higher time frame. Let's get rid of my little Etch-a-Sketch. Did you have an Etch-a-Sketch when you were a kid? And if we close with a topping tail, how could it possibly not go down next week? Dan says he still does. He plays with it at night. Dan's funny. And so look at this. If it closes bearishly, we'll look for follow through. I mean, how long can it hold up here without cracking one way or another? And, part of our discussion yesterday was converging moving averages and looking how these things are intertwined in prices. It's got to break pretty soon. It can't stay this way much longer. And Russell, we always look at. All right. So, again, it's the beginning of the day, but a nice bullish bar that suggested it could go higher. And now it's being negated and pivot lows to the left. So that information suggests to me, while this might continue to come down there's going to be buyers. That's the thought process. Momentum move up. What does it have to do? It has to create support. Go sideways, breakout, pull back, higher low, whatever, void, and it slams down through because there's no support. So it's got to, and I say that like it's got to happen, but it's got to come down into that area. It doesn't have to come down I missed the click. It doesn't have to come down to the lowest low area. So again, when you mark off areas somewhere in here, buyers should want to step up. Now you go to a smaller time frame. What I said before, momentum, typically it's going to make a lower low. The momentum will slow down, where you'll start getting some green bars here, and it should happen in this area, where then it tries to make some kind of a counter trend retracement. And if you're doing 0 DTE, down here would be where you'd want to look for that scenario to sell a put spread down below this support. Amazing move in Bitcoin, huh? Wow. I wouldn't have thought that, but there was some news yesterday. I didn't catch what it was, but I know there was some news that ripped this thing higher and just peekabooed above that pivot high there. So that was pretty wild. And probably that's what maybe got the markets going yesterday. And whatever. We looked at the dollar, dollar's going up, silver's continue to inch its way down, and it'll inch its way down toward the area of this support. And it was to the left. And gold will do the same. So far, it's holding up okay, but this isn't an uptrend. So, somewhere in here, buyers will step up there. And what we'll be looking for when it gets down there is, does the dollar hit some resistance area and it starts to roll over? And if that happens, this will make a counter trend bounce. Up near resistance, head and shoulders top, or head and shoulders failure. I don't know. We'll see next week. And lastly, I'll look at the transports and then hand it over to Dan. This will probably gap down like everything else. And with that said, we'll see where everything is going. No, I'll just point this out that we looked at this yesterday and I said, look, with so many people talking about what they believe is going to happen and so many opinions, if you know what charts to look at, you know what the world is thinking. And the world is thinking the Fed was going to continue to raise interest rates, even when they were saying it, they're going to do it. Others were saying no. And now you see this stuff. Now they're saying, oh, now they're likely to continue. Well, this never said they were going to stop. But all yours, Dan.
Good morning. Yeah, the old equity market's playing chicken with the Don. I'm going to go through them all, but they're all. I only got filled on 3. Abbott here. I just moved the stop over yesterday's high. We have a bear put debit spread. I did Twilio put spread or naked puts, and that's gapping up. So I'm bidding a penny. Roku, I just posted this. I want this as a core. Hopefully it takes a week or two to back and fill, because right now you got no logical stop is the problem. It's so far away from a major pivot low. So let's go up here to earnings. Cisco, here we go. All right, nice gap, breakout, top of the range. That's a buy on a pullback. I don't see any prints. Shop. Now, see, this one, when we were talking about a put spread, I told Sam it scared me because remember I said if this fails, then you got no other lines of defense. We like selling put spreads like around here. Like let's say this bar right there. This is a no-brainer put spread under all this. So that one is a bearish gap. Obviously, there's bearish gaps all over the place. But I'm gonna keep the ones on here, either as short opportunities or the ones that I'm looking to buy a pullback. Synopsis 365, so that's deep into this bar, so that's just a stay away for now. Let's see what happens. AIG opening flat under yesterday's low is a short. NTR. Here's the other one, Don. I did NTR, so this one's getting against me, but I have the 71s way the heck down here for Friday. And with 99.9% certainty, I got a nice open game. So I'm bidding 2 cents to close that. RSG, bottoming pattern. I was tempted to do the 120s yesterday. I didn't. I don't see prints. Bottoming pattern. We got to see prints. ALB up a little bit. So this is bullish, you know, gapping up, and the gap's not too big. Relative strength to the market. Anything green is relative strength. And so I always just glance at the Dow 30 also in my minder. And Johnson & Johnson is up the most, only up 50 cents, but wow. Look at that. Next Wednesday, MT Live, we're going to be talking about classical patterns. And that is a no-brainer descending triangle in a downtrend. Wow, Johnson & Johnson does not have any love last couple of weeks. No prints will come back. SGen. This one, it's bullish daily, weekly, monthly. I'll keep it on the list for a pullback, but right now the gap's too big. No prints. Housing stock here. I don't see any prints. Talking about housing, there's also housing number here. So we're gapping down. I set an alarm at 70.70 because if this can recover, that's a buy setup with a bullish turn. So housing has been holding up very well with the rising yields. I heard CNBC saying that the housing starts are where they were pre-pandemic low. And I heard some other guys saying the US they need 9 million more houses to you know, based on the imputed population and so forth. All right, CF, no pattern. But 30-minute high, there's a ton of support here. Could be a put spread Friday. It's a big mess, but bottoming pattern, no prints. HST, gapping up here to resistance. It would be fine if it sets up on a pullback, but I had plenty to watch already. VIV gapping down a little, no pattern. Twilio, we know about. I did the mixed puts. EQT is just on a steady downtrend. Z and ZG. These are both nice. Let's see which one's better. ZG. They're both good. I'm gonna put ZG here. And we were talking about doing a 42 put on that yesterday. But that's a nice pattern, gapped up, and it's a buy setup pre-market right here in the gap fill. That looks really good if it can hold. Our goal is a bear 1, 2, 3. You can short the week's low. SO gapping up, but no pattern. Put spread maybe. CEG. We'll come back, but if you want to set an alarm at yesterday's high, if it can negate the gap down, then put spread. D-Dog, you know, rallied a lot into the 200. 81 bucks. Bearish. Wow, that's really bearish. VMC. Ah, this was the one. Remember, I said this thing was rallying into earnings? And I said, can you imagine if this opens up under this bar today? Guess what? That's exactly what it's doing right now. So that is an amazing bull trap. I don't know what rumors were flying yesterday, but there's some pain for the overnight bulls right there. SWK. Well, John, two things. It's up 4 bars at the 200. Number two, whenever you're a penny or two away from an even number, just let it go through the 92s. Just set an alarm. I do like weekly, monthly. But let's, we're today in particular, we have to, keep an eye on what the market's doing. I'm not going to be fading unless something's really genuinely on its own page, like an earnings gap or something. ETR, no gap right now. This shows 235, but that's just one print. Let's see, this is also the type of sideways pattern that I would say you could trade it up or down, because you have a void below and a void above, and you had a buy set up on the weekly. EPAM, ugly gap under these 2 bars. I don't see any prints. Zebra. All right, that looks good too. That's a sloppy buy setup. Made the turn on support, gapping up. Cool, down $8. Same with this buy setup, made the turn. I'm going to set an alarm at 384 because if it can negate this gap down and be a bear gap that bullies, many times I don't set alarms. I'm like, oh, it gets gap too low. And then later in the day, I see it taken out to high. And I'm like, wow. So how you get around that is set an alarm. Para, there's ugly gaps everywhere today. So this actually was a very nice buy setup. And we don't hold into earnings unless it's a core long, and then we sell calls against it. But that was a nice buy setup. No prints, but it's in an uptrend. Daily, weekly, monthly. We'll come back. Toss 20. Oh, another nasty gap. It's gapping under all 4 of these bars. It's way down here. Still looks lower. Maybe let's say maybe I'll just do another push here and get down to the 50 MA at least. H high end will come back. This HSIC, this is bullish. I'm going to set an alarm at 89.20. Oh, look. All right, so I got filled on one of my puts at a penny. You hear that ding right off the bat? That's why I always, if I'm bidding. All right, so I'm getting out of my puts here. My overnights. All right, see, so this one's gapping down now, so damaged for now, but still in support. WSO, I don't see any prints yet. ENB. It's down 4 bars, Thomas. Not my style. In the market, it's down a lot pre-market, so you got to be careful on. Well, I had different strikes. Yeah, I'm filled on my Roku and Twilio. Let's see, I have NTR also. NTR. All right, that's me bidding a nickel. It's 5 cents by 55. So what I'm gonna do is bid a nickel for the 72s to try to get one of those free debit put spreads. Somebody just jumped me at 15. Unless it stopped out break even, yeah, that's an ugly gap. Yeah. Yeah, we were in that with a break even stop. Peter, so this is now, it was a potential double bottom. But now with this ugly gap, it's a gap breakdown, descending big triangle looking thing. So yeah, that looks ugly now. Let's give it a few minutes. I just keep one on a Word document on. They're all in the closed sheet. They're just, you would have to read the comments to see which ones were earnings trades, but no, I don't track them other than my little Word document.